We've got Sanjiv Bhasin joining in on the show right now. Sanjiv, hi, morning. I believe chilly winds back in New Delhi with fresh snowfall in the Himalayas.
Yeah, good morning. Well, Aisha, very pleasant weather. We were out yesterday also and there are a couple of gatherings, but very pleasant weather. Far cry from the 3 degrees, which we saw in mid-January and so on. But yes, very pleasant weather. Very good time to be here. It's not all that cold, and you would really enjoy the sun in the afternoon. But that's what the market is all about: sunny days. And the left out feeling being humongous with FIs. They are back now. The Dow is above 39,000, the Nasdaq above 16,000, and I think we should be looking at slightly higher levels, though consolidation in this week of derivative expiry, with I think 22,000 now being the base for this expiry on the Nifty.
So, what's going to lead the markets higher or keep it amidst bright sunshine? Will it continue to be autos on the upside, and you think private banks will continue underperformance?
No, we've been contrarian. We think we've taken chips off the auto block. We've added banks and we've added select metal stocks. You know, this whole Japanese rally, which has now taken the Nikkei closer to 40,000, is being led by metals and, the Nippon Steels of the world. We have to realize that China come back, the whole impetus on growth has to be very co-synced with commodities. And I think the dollar is definitely headed lower, which will only mean good news. In India also, if you see the capex side, I think there is going to be a very strong demand as far as construction activity and the ancillaries. So commodities is something which we are very bullish, and hence we continue to have overweight on the metal stocks.
Continue to have overweight on the metal stock, but just taking stock of Asian Paints, that's one portfolio stock that has been just blue chip and compounding beautifully for a lot of investors. But today, CLSA has gone ahead and downgraded the counter to to a sell now from underperform earlier. The target has been cut sharply to 2,400 rupees versus over 3,200 rupees that they had expected earlier. They are talking about the increase in competition, and they're saying that the company, despite being the leader, is not going to be immune to either the near-term growth headwinds as well as the margin. So keep an eye out on all of that, and they've cut the targets and the estimates by 8 to 10% for the next couple of years. Mr. Bhasin, what's the view on Asian Paints? Those long-term investors that are holding the stock, should they look at booking some of the profits, or is it a time to perhaps add more?
Well, it's a glass half full, half empty. Anisha, I expect March to be a difficult month as far as the momentum stocks go. I'm not forcing, too much of, I'm forcing too much of froth over there. Hence, I would be in defensive names like HDFC Bank and Asian Paint, where you don't get these opportunities very often. You cannot have capex expenditure, the home building at such a pace, and Asian Paints not being part of it. 53% of the decorative segment. The problem is that now most of the FIs have been underweight India on the momentum side. So now they are chasing defense stocks, they're chasing PSU banks, they're chasing anything with a tag of PSU because the left out feeling. So you will sell HDFC Bank and CLS and Asian Paints. I still think Asian Paints as a pedigree stock will give you an opportunity. And if you do get it around 2,700, 2,800, you must add. So doing a SIP in HDFC and Asian Paint is an excellent strategy. We have HDFC Bank in our coverage. We've used this last month only to add HDFC Bank. When there is such a big herd of selling, it generally gives you a very sweet long-term opportunity. And like I said, I am foreseeing a lot of volatility in March, which could be on the negative side. Hence, HDFC Bank will stand out over there.
Okay, keep it safe. Stick it out with HDFC Bank and Asian Paints. They're actually giving you a very stable opportunity. That's the word coming in from Sanjiv. But an interest bullish on Vodafone in any case. But what about Indus Tower?
So Aisha, I gave a back on Indus Tower on the same pretext that if Vodafone is going to be raising cash, then the biggest receiver is Indus Tower. And you saw Indus Tower's quarterly numbers. They were a blowout. So that 200, 210 is 240. I don't I don't rule out 275 coming very fast in this. And we are aware that their business whole, their whole catalyst business is doing extremely well. And what they had written down for Vodafone is now being receivable. So they said the last 4 quarters actually money has come in, and slowly but surely a big infusion will mean that Indus Tower gets a lion's share of the money which was pending, and that streamlines the business. That is what Kumaramangalam is telling you. Plus, you have the added news of government saying we want stability on their entry into 5G, and we have no plans to make a killing from the investment we made at 10 rupees. I think Indus Tower and Vodafone both are accumulate on declines, and that's been our stand over the last 3 months.
Okay, accumulate on declines, that's the word coming in. But from the frontline index, of course, these private banking names have underperformed. Mr. Bhasin, you talked about HDFC Bank, how you're still very positive on it. But what about Kotak, Axis, ICICI of the world?
Yeah, so Anisha, it's a strange dichotomy. The private banks, which actually should be getting the credit for expansion of margins, better, NPA performance, they are being neglected at the cost of the PSUs. I am of the opinion that you can't get a better entry point in the whole market. The best play now is large cap private banks. And like you said, I would say ICICI, Axis, HDFC and Kotak in that order are going to stand out. Now, time is on your side and patience. That is what is needed. Take some chips off the PSUs across the board except ONGC, which is our top pick, and GAIL. But otherwise, I find no value in PSUs at this price. All you're seeing is mutual funds and FIs, the left out feeling getting humongous, and they are selling some of the private banks or whatever their quasi plays at the cost of getting into that. It can't be a better moment to do a SIP in some of the large private banks. You'll be richly rewarded in the near term.
Brings me to the entire urban consumption play that has done very well. Now, given you are saying that don't be in momentum or at least stop chasing the momentum, is it the time that all that luxury play and the urban consumption themes also merit a profit booking?
Well, yes and no. You'll have to see selective pockets, Anisha. I am very bullish on consumer stocks, and I think the worst is behind. So, two stocks which we've been accumulating is Bata and Patanjali. Look, the rural masses are gaining. There has been the MSP, the other issues, rainfall, and you cannot have Hero Honda, Eicher, and Bajaj at all-time highs, and Patanjali and Bata not participating. Look, the brand evidence and the growth aspiration to get onto better consumer names, which is going to drive Bata to be one of the best plays. As you know, Bata is now, subcontracts their business. Their liability franchise is almost nil, and the margins are going to accrete. Same is the case with Patanjali. I think it is going to get into more market share from lever. And if you see across the board, I go to smaller cities and all, Patanjali is more evident than any of the large FMCG players. So as a disclosure, we've upped our guidance. We think these stocks are going to outperform along with private banks and select and metals. These are three phases which are contrarian and which are not in the popular list, but we don't want to be in the popular. We are taking money chips off the table in a large part of the PSUs. We think the rally has been overdone. This is the time to be in select stocks which have very, very good risk reward like we named.
Why Bata? Why not Campus? Why are you buying Patanjali and why are you not buying Britannia?
Simple logic, Nikunj. I think Bata as a market cap, as a market share is only going to grow, and the aspiration to move from Campus to Bata is very, very evident. Secondly, Bata's expansion on, like I said, their change in model of contract sourcing has been a very, very big plus point as far as labor and union things. And I think Bata fits the bit perfectly for a comeback in rural incomes and spending capacity. Patanjali purely on the fact that their brand expansion, their margins, and the type of businesses which they are in. I think in the the acquisition of Ruchi Foods and so on, that is going to see very, very handsome comeback. I am very, very overweight on both these stocks, and we don't want to chase 60 times at Britannia. We think Britannia is a good fit to buy. But I would be putting more money in, like I said, in both these names. I'm not bearish on Britannia, by the way. I think Britannia becomes a very good target for being one of the most sought after takeover games because of their inherent low equity base of a promoter, and that could be the card on the cards over a period of time. But Nestle continues to be my top pick in the large caps, and Marico and Patanjali and Bata in the mid and small cap.
Bear in mind that we're just discussing this on Swadesh right now, just when we were there, which is that folks just think about it, and that's just my personal view. 70% of the India accounts for 30% of the consumption. 30% of India accounts for 70% of the consumption. Within that, you got right at the top of the pyramid luxury. That's not even 2%. So while markets are focusing on the ultra luxury player, and Ethos has done well, a landmark car has done well, anything which has got to with luxury. So I think that luxury trend is not going to change, but there the base effect would kick in. But for the broader mass market products, 2021 to 2022, first you got hit by COVID. You had an unequal recovery. Then you got hit by inflation. Then you got hit by monsoon. So interestingly, they've had one issue after the other in terms of normalization. Now that inflation has come under control, seemingly under control, the benefit of productivity gains and infrastructure spends and railway capex, all of that has started trickling in. The huge base effect what we saw because of revenge shopping, that is also behind us. Some of these categories will start making a comeback. The early evidence actually has started indicating to us, whether you look at two-wheelers or you look at semi-urban data. So what Bhasin Saab is saying is precisely that point we are discussing in Swadesh, like QSR, footwear. These are categories which are not compulsive categories, but these are categories which are aspirational categories which will do well when the base effect of inflation starts to wane away, and when you have more disposable income, which I think is kicking in after 3 or 4 years of these extraordinary situations. एक साल monsoon था, उसके पहले inflation था, before that it was COVID. So these factors I think are something which have really dented the pockets, some of these niche pockets. So in that same spirit, Bhasin Saab, I think V-Mart retail, D-Mart, they should also come back.
Correct. I think DMart, but that we are playing through Reliance Retail. And I think Reliance Retail itself suffices. By the way, Reliance has moved from that 2,300 to 3,000 on the back that retail, Geo ARPUs, and their other, solar energy and defense plays, their EV, their other, businesses are doing extremely well. So we'd rather pay that to Geo and Reliance Retail. We've had a buy on Geo from 230 levels and Reliance from 23 levels as a disclosure, and that has played out very well. But like you said, Nikunj, the real money will be made in these names which have a marquee name and which have underperformed for whatever unforeseeable, reason. And I think Patanjali, Bata, and Nestle at the top will fit in that bracket perfectly.
Mr. Sanjiv Bhasin is joining us on the show as always. Mr. Bhasin, good morning. Good to be speaking with you. I wanted to begin by discussing this entire consumer durable space. We were just discussing Havells. It's one stock which hasn't moved much, but yet it's one stock that doesn't correct either. And of course, on Whirlpool as well, there was that fresh commentary that we got from the global CEO talking about the reason for offloading some stake in the Indian business. And the reason they gave was that the stock trades is expensive valuation. They expect the valuation to come down, and they clearly saw an asset arbitrage. Do you think this entire space is a bit heated up?
Good morning, Anisha. You have very, very marquee names which have gained market share, and there's even though the unorganized sector exists, I think Voltas, Havells, and say Crompton, they are really the ones which are the big players. Yes, Whirlpool in the white goods is a very expensive stock, but it has always been a brand which has been admired. It's like a DMart or a Asian Paints, something of that category. I think that this is a very sweet spot, given that middle incomes are now rising, and you've seen that across the board there are no coolers. Everyone wants air conditioners, and the advent of LED and the whole gamut of appliances which all these companies have been stellar performers. Voltas also on the back that the Middle East cooling tower business, which generates about 20% of their revenue, that has been in a sweet spot. And N. Chandra indicated that our consumer-facing arm is going to get more mileage from us. Now, Voltas as a disclosure last year in June at 750 was my top buy. And we own both Voltas and Havels from much lower level, 995,000 on Havels. And you're right, they may have not performed, but that's in line because everyone has been avoiding the consumers, side of the market. I think rural incomes are rising, and if you want to play, consumer is going to be the next play. Given the advent of preference of bigger, names and preferences for brands, that is why we suggested Bata and Patanjali. But I would definitely advocate a buy on Havels. As a disclosure, both uh, Havels and Voltas have been in our portfolio. Voltas has been a total outperformer, and Havels has been a very, very lukewarm performance. But given the type of businesses they have and the performance of Lloyd's now after the merger, they are in everything over there as far as consumer appliances go.
Sanjiv, hi, morning. Have to ask you about Paytm, considering you were the patient one, still invested in the stock. Wanted to understand what is it that you've made of this latest move by Vijay Shekhar Sharma of, kind of messaging to the regulator that he's associating himself from Paytm Payments Bank by stepping down.
Well, finally, the ego is being let loose, and you're realizing you have to think of the bigger good. It's the case like the Goenkas don't want to let go with 3%. At least Mr. Vijay Shekhar has taken the right move in the broader perspective. Now we are aware that there may have been the KYC issues, and they've denied that there was no money laundering because they don't have an foreign exchange license. So I think it will set to rest any other speculation. And now with the change in the governing body, it will at least give you a better image of the payment bank. What the regulator takes gives them time. That all is in the domain of the regulator. They will wait for the report of the ED and other things, for which I think they've been absolved of a lot of things. So it's a matter of time. On the other hand, the way they've gone about of increasing the banks where they can share and so on, at least puts the business right back on track. Yes, the margins and the accretive will see a little bit of a hit, but we still think the longer term story of Paytm seems very, very strong. We are staying put. We will wait for more. Only thing, this adds more weight on the side that now the governing body will have more teeth, and at least there will be unanimous board of directors who are more appreciated by the central bank and by the regulators. That is what I have made out of it. Rest we will see, but I still think the stock is going to see volatility. We would recommend that let it stabilize, let these things die down, and then you can take your call.
Yeah, and volatility is something, Mr. Bhasin, which will be there in Vodafone and Indus Towers as well. How should one approach the telecom sector now?
So Anisha, it was a scream at 11 rupees and at 205 rupees. Both those stocks are in our portfolio. We think that this is a very, very sweet spot for the turn of things. The receivables from Vodafone means Indus is in a very sweet spot. They've already provisioned for the So if anything comes as a right back, their margins last quarter were the strongest. I still think 275 is attainable there. And Vodafone, rightly so, we will wait for what the 2,000 crore which the promoter has raised will be there, and what's the guideline. But the bigger thing, Nisha, will be if they do get some foreign player or a foreign investor to pump it. They need more money on the 5G side. Their ARPUs are growing, and we realize that they are there. Now, whether you can say 2.5 players or 2.75 players, they are still half of 0.75. And if you see on a 11,000 crore turnover, they did an EBITDA of 4,500. So I think they are there to survive, but the debt overhang will constantly remain as something to be addressed till they raise more capital. So let's wait and watch what the capital raising is. Indus Tower definitely is the bigger gainer because of the capital infusion.
Okay, Indus Tower is the bigger gainer if Vodafone Idea does get that fundraise going. But Mr. Bhasin, what about the PSU banking names? Of course, a lot of them have run up. Are there any select names that you would still recommend as buy?
Firstly, Anisha, let me also say that everything in the AB stable is doing well. AB Capital. Now look at a stock called ABSL AMC. I have been bullish on that all the way from 400, 425 level, and it is underperformed. But asset management companies are here for the next 20, 30 years. I'm just giving a call. It is in our portfolio. We have a very, very good long-term view on it. But at 500, it has just given a fresh breakout. It has hit a new 2-year high. I think ABSL AMC in this table is a very, very sweet spot to be in, given that it has the holding company of the AMC, it has AIF, it has insurance, and all put together. That stock can be a real outperformer from here. I don't rule out 650 coming in the next 3 to 6 months. On the PSU banks, I would be more overweight on the private banks, ICICI, HDFC, Axis, Kotak. That is where I think there will be more delta to be gained over the next few months. But in the meantime, we still think that State Bank stands out over there. The rest we will not chase. We have booked profit across the board in some of them, and we are turning our preference towards large cap private banks.
Sanjiv, just wanted to get your sense in on how much more damage do you foresee for Asian Paints before it prices in another strong player in the market, namely Grasim?
Well, first to Dixon Technology, that is one of our top holdings all the way from 3,700, and we have no intention to get worried by like the Gabbar Singh of Sholay, which is CLSA and Jefferies. At 7,000, when a stock is gone from 35 to 7, there will be ups and downgrades, but stay the course. EMS is here for time to come. We think Dixon finally will even cross 10,000. Look at the language of the management, look at the performance, look at the data which speaks for itself. But like we said, there is an opportunity to buy and sell. I still think any decline in Dixon is a buying. Same is the case with Asian Paints. We saw the same downgrade for Eicher when Harley was launched for Hero and Triumph for Bajaj. And after a couple of weekdays, the stock bounced back purely on the back of Royal Enfield only gaining market share. So I think Asian Paints deserves to be done by a SIP. Let the initial flurry of downgrade get over with, but that's a brokerage call. On the underlying business, it will take miles before Grasim can dent into the market share. It will be a little threat, but the pie is big enough for all to survive and Asian Paints to grow. We continue to think consumer names are going to outperform at least in the near to 6 months. And we think if you have to take some chips, it's to take off the momentum plays. So I continue to hold that Dixon is one of our top holdings, and we continue to be very, very bullish on that space. Asian Paints is something which we have not that much of exposure, but we think we will add closer to that target which most have given, which may not come in the near term. But this is one blue chip along with HDFC, which you must have in your portfolio.
Let's bring on board Mr. Sanjiv Bhasin now, Director at IIFL Securities. Very good morning, and thank you so much, Sanjiv, for joining in with us. Mr. Bhasin, let's talk about Vodafone Idea, right? You've always spoken about it. We ended on that note. Anisha was mentioning how execution is the key. What are your thoughts on Vodafone Idea now? What are you doing there?
Yeah, good morning, Winnie. Well, it's a very positive and ambitious target, and it tells you that the AB Group is still in the fray, and they want to keep the flagship company going. Now, all this means well thought out plans, but how the execution is going to be a $1 million question. You also have to realize that if there is a right issue to fund it, then the government owns 33%. Will they participate? The promoters have assured they want to put money. But at least the liquidity, if they manage to raise that could be a game changer. Given that 5G and ARPUs are rising now, you see, Vodafone has never defaulted on any bank loan. It has always been the government as far as spectrum and other places, and that interest was converted into equity. So it's an ambitious target, and I still think that there will be, the third player, whether he's half or 0.75, and we'll wait for how the funding is arranged. But like I said, if you are invested, then just stay put, wait for the further news, how they develop. But it is definitely telling us that with rising ARPUs, today Sunil Bharti said ARPUs from 200 can hit 300 now for Bharti. And Vodafone is still at 140. So I think that will be an added advantage. And if they can get their funding correct, then 5G becomes a big play for them over a period of time.
Sanjeev, on the matter of this ARPU rising, there are two sections. One say that Sunil Bharti and his team has been talking about a case for higher ARPUs for some time now, while others, including some brokerage community analysts, actually believe that by mid next year you could see a bump up coming in. Is the stock pricing it or not yet at 1200 bucks about Bharti, and it will have a rub off on Jio as well?
Yeah, good morning, Ajay. And Sunil Bharti is not saying from now. I've been tracking Bharti. I own it from 550 levels, and it was there when Bharti was close to 140, 145. If you recall with Geo, and he that time assured that 200 is coming, 200 is there, and you've seen that the appetite for data, the processing data is the new gold, and I think with inflation, with wealth effect, 300 on ARPU over a period of time is definitely achievable, which also means that Bharti and Jio both will be riding their way to the bank. And I still think that Bharti is not priced in the 300 rupee ARPU. Also, you must realize that now with the payment banks and so on, they are all moving into more technology-driven fintech apps, which I think over a period of time will also add to the revenue. So we think Bharti closer to 1100 could give you a very good opportunity. And if you are there, then Bharti and Reliance continue to be the top picks. Vodafone will be a dark horse. It's rallied from 11 to 18. It will plateau around these 15 levels till you get more clarity. But ARPUs are definitely going to rise over a period of time.
Sanjeev, we all have seen how some of the consumer appliances company, air condition companies have had a very rough patch in the last few months. Yes, Voltas, Blue Star have come back. I'd like to just bring to your notice a commentary coming in from one of the leading players last evening, which is Godrej Appliances. Yesterday went on to say that they are expecting 20% kind of growth in the appliances business, including air conditioners, refrigerators, etc., going into summers. Now, 20% is a pretty decent number in my view. How would you play, this if Godrej have visibility of 20% in appliances, it will surely rub off on the entire sector. Anything which you like there, and what's your take on this commentary?
Yes, Ajay, and I've been stating that this is the time to be in consumer goods, whether it's white goods, staples, or even discretionary. Discretionary has outperformed as is available, as you're aware of two-wheeler and four-wheeler, but staples have hardly performed. So, we've been upbeat on Bata, Patanjali. We also own both Havels and Voltas, and we think Ajay, the real income which is going to be generated now is from the tier 2, tier 3 and the smaller rural class. That is where you're seeing unprecedented growth. There are no coolers now. Everyone has moved on to the AC market, and with the advent of lower inflation, lower rates, I think rural India is going to be the one where money is going to be made. So it's time to book out of those consensus trades of outperformance on PSUs and so on. They could, but you should be in consumption stocks because I think they are looking very, very good as far as the earnings go. As a disclosure, both Voltas and Havels are in our portfolio, and now you weather the worst of the winter. So if you are looking forward to the next 6 months, anticipation of that sales start from now. And what you just read out from Godrej is a very, very big positive from one of the big players in this industry.
Pull up the valuation table and then I'll go to Sanjeev on that. Sanjeev, valuation picture, when we looked at Indostar, which is seeing Matthew Serek's interest coming in, Florentry, IB Housing again 4,000 crore, 0.6 times, 0.89 times, versus the industry median is at 1.5 times as far as NBFC goes. Any thoughts on these two, Indostar or IB Housing? Sanjeev?
So Ajay, we put our money in IB Housing at 115, 120. When there was no promoter holding over there was no promoter with more than 1% holding. It was only institutions which owned it, and it was available almost for free. And pessimism was at its highest as the old owners, Banga and the rest of they had all exited. That was the time actually you should have been in the stock because the valuation comfort was, like you said, it was at 0.4, 0.3 times price to book. Now all those have made a comeback because you've seen NBFCs actually up the ante, and like you pointed out, the industry average is at 1.5, 1.7. Of course, the risk to reward was very favorable. And I think now there is a transition with new name and new promoters. We did invest, but we have booked out on that. We are now invested in India Bull Real Estate, where I think embassy's takeover and the merger just on the annual, NCLT will give it by middle of March. I think that could be a game changer. You can imagine what 6,000 crore market cap means for one of the largest marquee builder of property in both Maharashtra and Delhi. And I think that India Bull Real Estate can be a big game changer here. That also trades at a market cap which is something closer to 5,000-6,000 against even default names which are like Unitech and Parsavnath, which are at 4,000-5,000. So I think risk reward there is very favorable. India Bull Housing Finance is going to be a game changer because of the new structure. And I think over a period of time, it will deliver a very, very good result. But disclosure is India Bull Real Estate is where we are very, very bullish.
Point taken. So that's the view coming in. So of course, an important news brewing as far as this entire space is concerned. We will get those details also shortly up for you. But in the meantime, let's move on. Mr. Bhasin, what's happening to the overall airport economy, you would say? Because today as well, Motilal Oswal has initiated coverage on Dream Folks, and they are suggesting a target price which is almost 30 to 35% higher than the current market price. Do you think the entire aviation, hospitality sector, Dream Folks, JMR airports, all of this has further room on the upside?
Well, Anisha, I used to stick my neck out because I travel so much pan-India that at 35, I said, I used to say on TV, खड़े होने की जगह नहीं है airport पे, कैसे GMR 35 रुपए है. And the lo and behold, look at the unlocking of the value. Aero City is doing rocking business as far as the hotel business goes. Their traffic flows, they are selling more black label than which is produced in Scotland on a lighter note. And I think that this place is very, very sweet. When a luxury turns into necessity, then there is no stopping barrier for the expansion on the upside. And as is aware, you go to any airport, your own Bombay airport, if you went to Terminal 2, it's a 1 hour waiting list just to get through. So I think this is there to stay. You have to catch on to the right themes which you want to play. I'll also take a word, Anisha, you were mentioning on Vedanta. Yesterday, I was there on their presentation. I think the presentation was superb as far as both their non-ferrous and ferrous side. People are not aware, but in India, the largest nickel producer and the only nickel producer is Vedanta. From Balco, there is aluminium, there is zinc from Hindustan Zinc. You name the product on the non-ferrous side, it is there. Aside from that, there is thermal power, there is gas, and there is energy. So I think some of parts the management has clearly indicated that not from internal, but they are not going to raise anything on the company as far as debt goes. They are only going to reduce that. I think if there is going to be value unlocking as per the plan, and if you just gave even 50% of that, then the valuation of this stock is so cheap at 99,000 market cap that I think this can even double and still look cheap. All we need is execution and going ahead on the promise which they have made in the presentation yesterday. As a disclosure, Vedanta is also under our coverage. We think metals are in a very sweet spot. Vedanta and JSW are two stocks we are betting on.
Okay. That Vedanta and that's the stock that you're betting on as well.
Quick question from Sanjiv coming in on SBI. Sanjiv, this morning, Mr. Khara of SBI has given a very interesting kind of an interview to our colleagues in ET saying that capacity utilization across industries is now hitting the 75% mark or thereabout. That's exactly the level from which on, green shoots of actual capex inquiries, in fact, start coming in, and one can take Mr. Khara's word for it. And he says that very confident of 14 to 15% kind of credit growth. At this price, SBI has done pretty well. It was the last mover in the bank, but has done pretty well. Would you latch on to SBI or some of the big PSU ones, say BOB, Can Bank?
So Ajay, we had all of them, PNB, Can Bank, SBI, Bank of Baroda, part of it in our portfolio, part we've booked. But we are more bullish on the private banks. The comfort of earnings, the comfort of CASA ratio, and the credit expansion. The liability franchise is just a matter. So HDFC, Axis, ICICI are our top holdings now, and we continue to do SIPs on those. So I think I will go by Mr. Khara's word, but SBI has already made a first mover to 750, whereas HDFC and ICICI Axis are now raring to go. I would say it will be private banks which will lead the bank nifty, and I would be more overweight on the private banks. Also, Ajay, I wish you well in your journey on the voyage on the ship. As a disclosure, ABSL AMC has been under my coverage on your channel from 350 400. Yesterday it hit a high of 529. Don't sell it till it hits 750. That's my advice to investors.
If you like this video, then like, share and subscribe to ET Now.